The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good day, money masters and treasure hunters. Welcome to the April 8th. How about that? We can go back a month. That's okay with me. But welcome to the April 8th wonderful Wednesday edition of Hour 2 of the Trader's Edge. I'm host Steve Rhodes, and I hope that each of you are off to a great start of your day. Let's make sure that you and we do everything we can to have a wonderful Wednesday. Of course, the easiest way to do that, let's always remember what's talked about is a dream. What's envisioned is exciting. Of course, what's planned becomes possible. What's scheduled is real. And I want to really thank you for scheduling your time with me here this morning. I'm absolutely here to serve you. So feel free to pick up that phone, dial on in at 877-927-6648. Of course, internationally, you can reach out to me at 727-445-1044. Remember, if you've got a question, well, I guarantee you, somebody else has got that exact same question. So don't call in for me. Don't call in for yourself. A random act of kindness. That's what it's all about. Call in for someone else out there. That's the way to live your day each and every day. This is, of course, Wonderful Wednesday. None other than Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow is up 77 points, trading at 17,952. The S&P is up 8 points at 2,084. The composite up 32 points at 4942. Russell is up about 6 points at 1259. The DAX is back 42 points. The FTSE is up 4. Gold's back $5. Silver's off at 10 pennies out there. All right. So we'll follow up from first hour show out here. We're waiting for what has been the most consistent pattern here over the course of the last 24 hours, and that is these little seventh wave patterns out here. We had a nice one that showed up at 22.10, really confirmed at 22.15. That was last evening. So at 10:15 in the evening, markets move higher. They move higher. They form a intermediate term high at 4:15. Get a confirmation at 4:20 this morning. Move down. They're not in that seventh wave pattern to the downside right now. Instead, we're looking at a potential seventh wave to the upside. We're in wave number 6 out here. We'll see if the ES Mini can get a little bit of gusto and get just above the 2,080 and a quarter level out there. And then we'll see if, in fact, that's when the ES Mini then really begins to trade lower to give something for the bears, or can it break out above that level? Now, there are some folks that want to see it break out above that level. And I know it's missing. I know it's missing in this so far 2015 run here. Stevie has not worn his rally cap. So I've got to put my rally cap on, okay, and that ought to go ahead and get things started. Now, if we do see a close above this 2,080-ish type of level out here, what we ought to see take place. So here's what we can look at today. I'll give you both sides of the trade. It's always important to give both sides of the trade. If we can see the ES Mini, let's go ahead and put this chart on my screen out here. If we can see it close above 2,080, I'll put the 120-minute chart on my screen out there. Can I repost my chart? I can do anything you want. Give me a moment here. Apparently nobody can see my chart out there, so I don't know what the Sam heck happened there. Let's try this. Let me know. Give me the high sign that you can see my chart out there. I don't want to be talking and you guys are looking at a blank screen, for goodness sakes, out there. So let's see here. So hopefully we got the high sign and then you can see the charts in the Tiger's Den. Otherwise, we got a problem here for the next 6 minutes or so. But if we can see, if we can get in my opinion, if we get a close above this 2,082-ish type level, let's see, let's use the, whoops. Gosh darn it, I didn't mean to do that. Let's use the high of 2,080-275. What we're likely to see is about a 35-point move to the upside out here. I can give you some other areas of resistance, but any kind of breakout there, then Steve-O's rally cap right here, it's a nice rally cap, by the way, then that says that the markets rally and they make another a minimum of a 30-point move higher. Likewise, if the lows get taken out, and the lows being in the 2,036 level, then you're looking at about a 35-point move to the downside, taking it to 2,000. 2,000, even Stevenish, somewhere right around there. So that now, the message of the markets as we speak right now, if you're looking at the ES Mini, the 120-minute time frame, the 60-minute time frame, whatever we look at, the ES Mini has broken out. It's broken out of the descending price channel. It's done it with conviction, with wide-ranging bars as it broke that descending price channel. Now we want to see if it can go ahead and break the horizontal level of resistance out there. And if it does that, then you're looking at that 30-point move to the upside. And if it can't, we stay in this trading range out here. We stay in the trading range. Maybe price just comes back and tests out the top of the descending price channel, somewhere right around the 2053, 2050-ish range out there. Maybe it gets all the way back to 2036. I don't know. What we are watching for is for a potential signal here, just simply on a 5-minute chart. Again, we got to wave number 6, not 7. We'll see if, in fact, during the next 45 minutes, we see that pattern unfold. Doesn't have to happen in 45 minutes, but it would be nice during the show so we have something additional to take a look at. In the meantime, let's go see what we can look at out here with the Dow up 73, the S&P up 7, Composite up 28, Russell up 5. Let's go start off and take a look at the ETF indices vehicles out here. Let's take a look at the Qs. What do we know about the Qs? Number one, key level of 105.70, which was the swing point high from March 26th. That high was 105.70. We saw that price get rejected with price and volume, light volume, because it was 24 million shares on April 6th. You can't bust them down. Says you want to go try and bust them to the upside out here. No reversal signal yesterday. Looks like a shooting star, smells like a shooting star, but was not a shooting star because there's been no trend established here inside of the QQQ ETF. This is where you really have to understand the distinction of candles and what message it is that they are giving to us. So there's no reversal signal here inside of yesterday's candle when you take a look at the QQQ ETF. It's just a candle. It just simply, at the end of the day, price went ahead, gave back its gains, did not close back inside the swing point. Hey, if it really wanted to go test the bottom of that swing point, yesterday would have closed inside that level. No test of it today. You don't need a test of it today. Real resistance inside the QQQ series ETF is that 107.14 level out there. Of course, we know by taking a look at equal weighted versus the QQQ series that it's given us a message that price wants to go higher. So you've got the Fed minutes coming out at 2 o'clock. The message of the markets, if the charts are correct, or if Steve was reading the charts correctly here, and you're following along with me, I show you the chart so you get to see what I'm looking at, and you get to be the one to be the judge out there. But the message of the charts is that they've already made up their mind. They want higher price. They want to join in on the party that is going on around the globe out there. We can talk about that later. We covered that during the first hour of the show. Of course, the archive of that is on Channel 9. Let's go take a look at the Russell 2000 small caps out here. What do we know about it? Well, it was traded inside that swing point from March 26th. That had 47 million shares. It cleared it with 24 million shares. What does that say? It says you got a rejection of a swing point with light volume, with price. And yesterday's candle, no reversal signal. Looks, smells like a shooting star, but wasn't a shooting star out there. Price inside. Well, I got the QQQ again. That's the second day in a row it's done that for me. I click on the IWM. Come on, give me the IWM. There we go. Okay, thank you. Sorry about that. I was probably screwing. Other people were watching, they were looking at their charts. They were saying, they were knocking on my screen saying, Steve-O, what the heck are you looking at out there? And you're exactly right. I was looking at the wrong chart. But now we've got the right chart on our screen out here. And inside the IWM, again, what do we know about it? It's got a confirmed A to B equals C to the upside. How do we know that? Because the B point out here from March 2nd, which had 29 million shares, was passed with 40 million shares. Yeah, there was a pullback with 42 million shares. That's kind of like even Steven out there. That doesn't bother me so much. If we take a look at that 29 million shares and you come back here, have we seen 29 million shares since then above that level? Yeah, we have. We've seen 31 million shares get above it and test it. And that was at hammerish looking, even though it wasn't a hammer candle. That was back on April Fool's Day on April 1st. So you've got a couple of confirmations of an A to B equals CD to the upside inside of the IWM. What does it have to clear? Well, it's got to clear the most recent swing points out here on March 23rd. Only 17 and 30 million shares out there respectively. So you've got resistance 126.32. You get above that, that says the IWM heads to 129, then 131, and then 135. When it gets to 135, then we've got to be maybe careful because it fulfills about a, I don't know, maybe it was like a 16-year consolidation breakout move. Then we got to be perhaps a little bit careful out there. That's what's going on inside of the IWM. If we go take a look at the SPY out here, what is it doing? Well, trading right now at 208.05. It's It's trading above its market profile support level. It would do itself a lot of good from the bullish side to hold above 207.62. It would do a lot of good to the bearish side if it closed below 207.62, but really needs to close inside 206.37 again. That's the swing point here from March 26. That had 153 million shares. As price traveled down there, did we get close to 150 million shares? The answer is no, we did not. 137 million on April Fool's Day, 86 million on April 2nd when it closed just slightly above that. That was a rejection of that swing point on price and volume. You had a second rejection. That was on April 6, 114 million shares. So you could say that price inside the SPY was moving off of that low with volume. The test came in on April 2nd with 86 million shares. The very next day, it moves higher with 114 million shares out there. That's what's going on inside of the SPY. When we get back from this break, I'll remove my probably, not so good looking rally cap out there. But that's probably what's really needed in the market. And we'll go take a look at the Dow Diamonds and anything else that you'd like as well. 877-927-6648. We'll be right back, folks. We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, Life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 70, S&P's up 7. Let's go check in on the Dow Diamonds out here. Let's go see what they're doing. Up 82 cents right now. 927,000 shares having traded hands. We know that with regard to March 26th out here, that swing point had 6.6 million shares. It was rejected with 3.2 million shares. So you got another rejection of that March 26th swing point on price, on volume out here that says you can't bust them down. You go ahead and you try to bust them to the upside out here. And then we had move higher off of that first test on April the 6th with volume picking up to the upside. 6 million shares yesterday, 6.2 million shares the other day. So in a light volume market inside the Dow Diamonds, not too shabby. Of course, what we also know about the Dow is that the price oscillator here, as we put this up on the screen, got well above the zero line. It's moving higher again this morning. Higher highs now being formed inside of it. That promises higher price inside of the Dow. So, again, I have no idea how the market's going to react, right, to the release of the Fed minutes. But there are plenty of signals that, at least that I'm throwing out here, for you to consider. With regard to what the message of the markets. We got these nice bottoms here inside of higher bottoms inside the price oscillator out here inside of the Dow as well, which had been kind of weak. So the Dow Diamonds itself, we go back to it. You got a rejection of a swing point low. You got the price oscillator above. Whoops, come on, swip back here. And right now you got price kind of traveling into an area where it is comfortable with 179.86. It's not there yet. That's your point of control. It's got resistance. What the Dow Diamonds need to do is clear the March 2nd high, 182.68. At least go test that high. We'll see if it can get any volume. Now, the markets worldwide have busted out. Even right now, we're seeing a little bit of give back inside of the FTSE here. We take a look at the FTSE. It's just coming back and retesting that 69.50-60 level. That is a huge breakout area. That takes you back to December 1999. If it can stay above that, that would be that would just simply be joining the worldwide markets out here. That's the key level to be watching inside the FTSE. It's trading at 69.54 as we speak right now. So we've looked at the ETF structures. Let's go take a look at, what do we want to take a look? Let's go look at some of these individual stocks. I think that's where we ought to spend some time out here. And let's go take a look at Netflix. Let's go get a feel for what Netflix is doing out here. Netflix is up $11.70. A million shares have already traded hands. If we take a look at Netflix, thus far, looked like it had an A to B equals C to the downside when the March 10th swing point was taken out with volume 3.8 million shares versus the 2.5 million shares, but really just kind of been traveling sideways here to the downside. There's not a whole lot of great information with regard to this A to B equals C depend. We're going to go ahead and delete that. Market profiles have kind of acted in such a way that they haven't provided a ton of information. What we do know about Netflix is this. Huge breakout at the 401.87 level. Really, the breakout took place at 334, even Steven on the trading session of January 20th. But that breakout, that wide-ranging bar, which is a mega wide-ranging bar inside Netflix, says support is somewhere between 334 to 401.87 out here. And we haven't seen volume off the highs or anything along those lines. So Netflix here really hasn't made its highs. It worked off an over bought condition. Not so much that it was over sold as price got down, but it's in that range back on March 17th as it was making lows, kind of making slightly lower lows with less relative weakness out there. That's a signal that the rubber band stretched a little bit too far to the downside. I don't see Tesla on here. I want to go take a look at Tesla. It gapped up. I want to see if it's given back that gap. It was trying to move above trying to move above a resistance level. Let's go see what it's done. Yeah, it's still above that resistance. So this here in the case of Tesla, well, we take a look at it. Tesla has broken its trend line, at least as we speak right now. That's a trend line from the high of September 4th to the high of November 18th. You can just go ahead and create that diagonal line. We can see that price now broke above that level. Volume here today, 2.6 million shares out there. It had volume moving into that trend line of 12 million shares. Now, you've seen 2.6 million shares in an hour of trading. If volume were to maintain this pace, I'm not saying that it will, and it likely won't, you could actually be taking out a swing point with volume as well out there. Swingish style point. The real swing inside of Tesla, that takes you back to December. Well, really, it's going to be up here. I mean, the real one to be looking at is February 5th, which got 3.5 million shares, between 225 and 219 as its price range out here. TSLA is the ticker symbol. Let's take a look at well, we can look at the direction share FTSE China, the YINN. Of course, that is moving up because, hey, did you see what took place in Asia last night? How about this move here? This move here inside of the Hang Seng, 961 points, nearly 4%. Macho move. We'll be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit tfnn.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow was up 68, S&P up 6.5. Before we went to the break, I had mentioned the Hang Seng, Shanghai Hang Seng out there. 961 points. We'll go ahead and post that chart here for you. This is a daily chart that we're taking a look at now. In the case of the Hang Seng, a couple days ago on April Fool's Day, it broke above its swing point from November 2010. You break above a swing point, that sets up a nice pattern. If we take a look at the Hang Seng itself, the A to B equals CD on this. It went ahead and it completed the 1-to-1 A to B equals CD here last night with that 960-point move out there. Now, when you move into a D point, a price projection with a wide-ranging bar as it did, I'm going to assume it had volume, it offers a higher price ahead. That says the next move inside the Hang Seng up around the 26,948 level. But this thing broke above a swing point. This has got a lot higher price to come at you now. Very much in an overbought condition, but much like the DAX, you can just simply move sideways to slightly lower to go ahead and work that up. But a very impressive move out there. That's why you're seeing, if we take a look at, as I mentioned, moving here today, one of the ETFs that tracks that is the YINN. No, that's the FTSE. No, that's okay. Yeah, that is the YINN, which is up 17% out here. But you really got to track it off of the. Off of the Hang Seng, in my opinion. But volume in this is. It's not that plentiful. On average, it looks like about 100,000 shares. Today, it's done 298,000 shares. So maybe this ETF, I don't know if this is a direction share. So it's a direction share. Maybe it'll start to really get some legs out here volume-wise. YINN, maybe something you want to take a look at. Also moving here to the, I took off my rally cap, and now we get to see the markets kind of pull back out there. Pretty cool, eh? Let's take a look at Petro China. PTR is the ticker symbol. That's up 6%, up $7. That's gapping up here this morning. Volume behind its move out here is about 145,000 shares, but certainly breaking out of a consolidation. That consolidation range between the 116 level and maybe 102. So you're looking at about 14 points added to 116. That says this probably moves up to 14, about 130. What do we have at 130? 130. You probably have a retracement level. Let's take a look at that. From high out here, from the high of September 4th, 2014, down to the low on December 11th. 130, your 0.618 retracement level is 131.98. Pretty good chance that is where ticker symbol PTR is headed to. I see that crude oil was out with their inventory numbers. Looked like was a surplus of 10 billion that flashed across the screen. Crude oil trading a bit lower. We'll go back to the individual stocks here in a moment. But let's go take a look at crude oil. Now, in the case of crude, can it stay above the B point of this A to B equals CD to the upside? That's 52.48. So a crucial test that's going on as we speak right now, in my opinion, is that March 26 swing point high. 52.48 is the number out there. And if price can stay above that, then we ought to see crude move up to 55.50, then probably 57.80. If it gets back inside, then it starts to maybe negate that A to B equals CD pattern, or at least make a very complicated A to B equals CD. So what you want to watch if you are inside the USO or the SCO, whichever side of the trade you are on, if you are short light sweet crude, you want to see it close below 52.48 today. It close back above that, and very likely you to see a run of 55.50 and then up to 57.80. That's what's going on with Texas T out there. Back to the stocks. We got Regeneron Pharmaceuticals jumping into the lead out here, up $10.35, up 2%. Let's go check in on it, see what's going on behind its move. Now, what we know about Regeneron is price came back to a little breakout gap, tiny gap nonetheless, between March 13th. Let's go take a look at that. That was at the, well, I guess I can't really tell you. That was at the high of 435 even, Steven, down to the gap by the low of March 16th, which was 436.56. So you got about a $1.56 area. Here's what we know about both of those trading sessions is that price came back, tested with lighter volume, 1.5 million shares on April 1st versus 1.6 million shares. You can't bust them down. What you're going to try to do, or it really just came back, forget about busting them down, really just came back to a breakout area, did it with lighter volume. If we take a look at a trend line out here, let's go do that inside Regeneron. This is a short-term trend, most certainly. You know, here you'd have to say is most likely the trend as it broke through that today, coming back and testing that. If I use even a shorter-term trend, you know, it broke it a day earlier. So that, no matter how you slice it, it looks like Regeneron Pharmaceuticals is breaking its downtrend, came back to a breakout area. Now it ought to go ahead and resume its action and try to move back to the highs from March the 20th. REGN is its ticker symbol. If we go take a look at Baidu, let's go see what's going on inside of Baidu, up 3.5%, up $7 here this morning. Baidu in a decided downtrend is what it looks like on Stevie's screen out here. That's the downtrend that began on its daily time frame. Back here, it looks like on November 12th, right around there, November 11th, November 12th out there. A very strong channel line to the upside that it needs to break out above. Well, coincidentally, if there are coincidences in life, it also has resistance at that trend line at its horizontal level of resistance, and that's your TAS market profile. That's at 216.92. So in the case of Baidu, if it can break above both of those levels, that becomes a strong move out there, much like we were taking a look at Tesla out there. What you like to see inside Tesla, what you like to see inside Baidu, what you like to see inside anything is when it breaks a trend, come on back, test it, reject it, and move on out. Just like Goldilocks had done out there. You like to see that. You don't always get it, but you'd like to see that just to confirm the move. That's in Baidu. Let's go take a look at Biogen, BIIB, up about $5 as we speak right now. What do we know about Biogen? Well, it also came back, in essence, to a level of support, some breakout areas out here. I did not do the math to see if this was a 3 drive to a top pattern out here. Nonetheless, assuming that it is not, it doesn't visually look like it to me. That says that Biogen eventually makes its way back to 480.18, 456.06, that high volume untested high that it has from the trading session of March the 20th. What else do we have moving? Let's go take a look at NetEase out here. That's up nearly 5%, up $5. That is doing what? That's taking out a swing point. That's the swing from February 4th. Only 497,000 shares there. And today at 10:41 a.m., it's done 494,000 shares. So that swing point is under attack with volume. You close above the high of 118.47. You're not above it right now. That would set up a huge A to B equals CD to the upside inside of NetEase. What I would use as my A point out here, I would come back to the swing day of October the 2nd. That's my A. My B point, well, it is my A if I can only get it to there we go. There's the A. Your B point out here on February the 4th, and your C point was a retracement down into March 12th. Uno to uno, 1-to-1, A to B equals CD inside NetEase. If it can close above 118.47, that says 131.23. Is that where price will head to? The answer to the question is no. 141.37 would more likely be the level where it would head to. Well, we've got the Dow now down $7. You've got the S&P off $1.50. Again, we've just got a little bit for the bulls and bears. We never did get to that seventh wave pattern to the upside inside the 5-minute, but now we got to start counting going to the downside out here. Let's go ahead. We'll make this green. We'll make it mean green down to the downside. Let's go see where we're at in the wave. Only that second wave to the downside inside of the ES Mini. If I go take a look at a 120-minute time frame chart, though, this will show us the horizontal trading range that price is traveling. It's got a long way to go before it gets down to that horizontal trading range boundary line at about the 2043. It would first have to tackle 2053, which should be a good level of support for the ES Mini. There's your 35-point consolidation. The red horizontal lines going across Stevie's screen out here. Let's continue. Let's go now take a look at stocks that are moving to the downside. Let's not look too much at Royal Dutch Shell. Let's go take a look at Whirlpool. Let's take a little Whirlpool bath out here. I don't know what that means. Just had to be said. That's up $3.63, down nearly about 2% out here. Whirlpool, which has been strong like bull, really strong like bull. It's trading into what should be a level of support. This bar here from December 17th, which has 3.2 million shares. You can see that every time price, has gotten down towards this level, it's found a bid. It found a bid back on March the 18th. Only 1.4 million shares. Again, really going against 3.2 million shares out here. Just really, and volume-wise, there is a swing point. That swing is from March 18th. That was the 1.4 million shares today. It's on 823. So it's moving down into that level with some volume out here. But it's got this support level from that nice little breakout on December the 17th out here. And it's got a nice little, looks like a high volume high that hasn't been tested. That's the day from February 4th. And that high was 217.11. You got to 217 even Steven on March the 2nd out there. So Whirlpool looks like just kind of churning and burning until it breaks below or closes below, I should say, the December 17th low of 172.85. All looks okay inside of Whirlpool land. Let's take a look at Pentair. PNR is the ticker symbol, down about 5%. Off $3 as we speak right now. Let's take a look at it. Oh, you know what I'll do here? We'll come back to it. Summation index for the Dow, still positive, still above zero. For the NASDAQ Composite, positive, still above zero. For the New York Stock Exchange, positive, still above zero out there. Sellers do not have control. It is the buyers who are in control. Hey, they push it down below the zero line, and then it becomes a little bit more complicated out there. Okay, back to the show here. Back to PNR, Pentair, gapping down this morning. Volume so far, 1.6 million shares. It's got a swing point down on December 15th with only 1.3 million shares. So it looks like that's the level where it is headed to. That price point is $59.48. 60.54 is the swing point high. Ticker symbol PNR. Boy, this thing has been in a consolidation as well, about from $60 to 69, so about a 9-point move. If in fact PNR, which has been in a downtrend, and then just simply the sideways consolidation here lately. I think Baz likes to call that the M pattern out there. It's making lots of M&Ms out there. What's your favorite M&M color? Red? Brown? What other? Hey, if you ever go to one of those M&M stores, they got all kinds of, they got a plethora of colors out there. Well, the color inside of PNR will be get red M&Ms out here if it can break below the lows of October 15th. That's a low of 59.09 because you've got that 9-point consolidation. Has not done it yet. Not saying it's going to do it, but that would be your measured move to the downside if you can break out the lows of 59.09. If we go take a look at what else is moving to the downside, how about Emerge Energy Services? EMES is the ticker symbol. EMES trading right now at 49.35, really just kind of been consolidating at the lows after making a 1 to 2A to B equals CD pattern. It completed that pattern back here on December the 16th, and ever since then just really been traveling sideways, working off what, an oversold condition. What's the most bearish thing an oversold condition could do? Just move sideways, and that's what Emerge Energy Services is doing as we speak right now. It's got to still break out that swing point low. It's not even trading into it from the trading day of December 16, 2014. But if it does, the resumption to the downside will go ahead and continue. Also moving to the downside out here, We've got Lionsgate Entertainment. They're entertaining us today with some red ink, down 6.7%, gapping down with volume behind the move, right into a sign of strength out here. That sets up your consolidation. Your consolidation now between the price point of $31.25 and $34.87. That breakout inside of Lionsgate, LGF, is the ticker symbol. 4.6 million shares was the breakout. Ooh, ouch, ouch. 5.2 million shares in only an hour and 17 minutes of trading. Nonetheless, seems to have found a bid here. Hey, 31.25 fails today, then you're likely to see Lionsgate head down to either 29.94. That's where the breakout began. That seems more plausible to me. And then 27.55. So you do have this open window out here. Gaps are your friends until they get closed, and then they basically become irrelevant. Then you just simply, that area of resistance or support basically no longer exists out there. What I don't like to use is, you know how I will take an area of resistance or support. Old resistance ought to become new support. Yeah, not so much in gaps. You can do it slightly for a little bit of time, but basically, once that window gets repaired, the Whirlpool, it's not the Whirlpool repairman. Who is it? It's not Whirlpool. Is it Whirlpool? No, it's Maytag. It's the Maytag repairman. Once the Maytag repairman's come and gone, you got to look for something else on a chart out there. Nonetheless, inside of Lionsgate Entertainment, I'd be careful out here because you could easily make the case that this thing wants to trade down to 27.55. I wouldn't close out the long trade just yet, but you close below 31.25. The sphincter muscle should get a little bit tighter out there. LGF is the ticker symbol. So as we come into this break here, we got a flat market now in the Dow. Flat market in the S&P. Composite up 14 points. I've got a request here. Somebody said, Steve-O, would you put your rally cap back on, for goodness sakes, out there? I'm going to let Janet Yellen wear the rally cap. Let's not take the spoils away from her. This is Steve Rhodes with TFNN. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's up 19, S&P's up 2, Composites up 19, Russell's up 4 points out there. I have word that Basil is not going to be able to do his show today out here. So let's go take a look at the Dow. Let's go take a look at the Chapman Wave, get a feel for. We'll take a look at a couple different tools and take a look at the Dow, try to get a feel for what's going on out here. So what we can see here about the Dow, all right, is off of this high. Let me get my cursor, my crosshair out here. Off of this high that formed on March the 2nd, went ahead, marched on down, made back here on the trading session of March 26, went ahead and made that fourth wave to the downside out here. Now, in Basil's work, you don't have that MACD crossover. Right now, what you can see, you got kissing cousins out here. You've got the slow and the fast that have come together. The question is, are they going to deflect lower, or are they just simply going to go ahead and get that positive cross today? I don't know the answer to that question. Here's what else we know about the Dow at this stage. Every time the Dow has tried to make its way down to the 200-day exponential moving average, that's that little blue railroad going across my screen. The last time that we were down here, that was on February 2nd, 2015. That level held as support out here. So with regard to the Dow, you don't have that positive crossover, which would then take you only in the first wave to the upside potentially. That's coming off of that low from March 26. So if the market responds well today, I don't know. I'll tell you what, here. We'll put the rally cap back on because I did get a couple emails asking if I would put it back on. Not because I would think it does anything other than hide my receding forehead, and that's a good thing out there. So maybe it's that flash that's coming out of there. So we got the rally cap on. So if the market does rally, you'll see that positive crossover. That would give you enough of a message to go ahead and take a long trade, in my opinion, inside of the Dow out here. So what else do we know about the markets? Well, we know when we took a look at the ETF structures, they've all rejected the March 26 swing point with light volume. Not enough to push it down. Hey, unfortunately, there's a little bit of bad news out here. Some signals. You got the Euro Japanese yen. We didn't cover that. That's kind of moving lower and sideways. It's not moving to the upside. You'd like to see that divergence. We do not have that present as of the moment. But what we do have, and going back to the Dow, if you take a look at the summation index, it's given its first bullish message, and it did that on the trading session of April the 6th. April 6th, price oscillator gets above zero. That says that now that the buyers are in control. Even yesterday, as the Dow gave back its gains, where sellers were unable to push that price oscillator below zero. The bullish side is you're already above that level. Prices move to higher highs. You get that crossover Inside your MACD, you got everything pointing to moving to higher price out there. If the market goes ahead and sells off, the price oscillator gets back below the zero line, then we're still back inside this little short-term consolidation that's going on inside of the markets. If we take a look at the composite out here, it's a moving to higher high ground inside its price oscillator. That's always a positive. Inside the New York Stock Exchange, that was the first one up. That was the first one that gave a nice bullish signal. That was on the trading session of March 30th. Nice little hammer candle back here on April Fool's Day. Nice little bullish engulfing. Says that this is really hammered out a bottom. Right now, it hasn't been able to bust into or above the March 23rd swing point low. That's what it's dealing with, and that's at 11,070.53. So that summarizes really the Dow. Of course, I've thrown in the the VIX index. Did I mention the VIX? I don't think I did. So if we take a look at the VIX index, that is trading below the 50-day exponential moving average, which is priced at 1537. It's trading at 1451. The market's going to sell off. You want to see, from the bearish side, you want to see it close above 1537. Of course, that could set up a more than 10% one-day rate of change. That says the market would bounce tomorrow out here. Likewise, on the bullish side, you just simply want to stay below 1537 out there. So, folks, have a wonderful Wednesday, and I look forward to seeing you tomorrow morning. Take care. Thanks so much for joining us.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.